A very warm welcome to one and all. We are Team 262 and we are here to present the Credit Research Report on Bharti Airtel. In today's presentation, we will be going through over three sections. In the first, we present you the industry overview, the company introduction, business description and its competitive positioning, and the management and corporate governance structure. In the second, we deep dive into the capital structure, financial performance and liquidity analysis. In the last section, we will be going through the investment summary and recommendation. Let me take you to the telecom industry overview. Historically, there have been 10 to 15 players in this industry. However, in recent times, there have been accelerated market exits and industry consolidation, leading to the industry being dominated by 4 major players, 3 private sector players and 1 public sector player. Intensified competition on account of Reliance Jio entering in the market in 2016 has led to extreme pricing pressure situations, which has put the financials under stress for the incumbent players. On an overall basis, the attractiveness of the industry is low for new entrants due to high setup and infra costs, and high bargaining power of suppliers and buyers, and high competitive rivalry. On one hand, where the attractiveness is low for new players, for the existing players there is an opportunity because the pie will now be sliced among 4 players and the internet penetration is expected to go double by 2020. Let me take you through the company snapshot. Bharti Airtel currently stands as number 2 telecom operator in India and number 3 globally in terms of customer base. It operates in 16 countries with over 448 million customers. It has a global revenue and global EBITDA of $12.1 billion and $4.2 billion respectively. The company has been present in this industry for over 3 decades. It was founded by Mr. Sunil Mittal in 1986 and went public in 2002. Over the years, Bharti Airtel has undergone many acquisitions and mergers like the Zain Telecom acquisition, the recent merger with Telenor and TTSL. This slide presents to you the different product offerings of the company. Now let me take you through the competitive positioning. In terms of businesses, Airtel has 4 major business divisions: mobile services, telemedia services, Airtel Business and digital TV services. In terms of peer comparison, Airtel has a more diversified portfolio in terms of its DTH and homes broadband business. If you see the revenue pie, the mobile business contributes the most to the revenue segment. However, the homes broadband is the highest percentage markup for EBITDA. Therefore, we see that the company is investing in this segment around 240 billion rupees. In terms of ownership and credit rating, Bharti Airtel has its ownership with its promoter group and a credit rating of AA. In comparison, Vodafone has a AA- rating and others have AAA rating. In terms of segments, Bharti Airtel has a strong position in the market of around 20 to 30% market share. However, it's not the market leader. Its India revenue market share has been in the leading position over the trend. However, in terms of the Vodafone Idea merger, it stands second. In terms of Q2 FY 2019 also, we see that Vodafone Idea and Airtel are standing neck to neck in this $18.5 billion Indian telecom industry. Let me take you through the management and the corporate governance structure. Under the board of directors, we have these different committees of corporate governance, and in terms of representation of the board, there are 11 members with more than 50% independent directors and 2 women directors. This is more than the requirement of Companies Act, indicating strong corporate governance policies. Its CSR spend has also increased multifold. In terms of revenue and EBITDA split, the African operations contribute 25% to the revenue and 30% to EBITDA margin. Its non-mobile business comprises 32.6% of total revenues, up from 27% in Q2 18. Even the EBITDA share of these businesses has gone up from 30% to 40%. Now I would like to call upon Rishabh to take this presentation forward.
Thank you, Tanvi. Now let me take you through the capital structure of the company. Here we can see that the company has a gearing ratio of 0.39, which means the company has a broad base of equity. Bharti Airtel being a family-run business, the majority of shareholding lies with the promoters at around 67.14%. This also tells us that the promoters have their skin in the game. Coming back to the debt analysis of the company, wherein if I look at the debt structure, the debt to equity ratio of the company has been rising on a year-on-year basis. The current debt to equity ratio is 0.64, which is very low compared to its peer competitor Vodafone Idea Limited, which is pegged at 2.22. Consequently, the interest coverage ratio has been coming down over a period of time. This is majorly because of the debt the company has taken for the capital expansion plant in the 4G spectrum area and the dwindling profit margins due to competitive pricing pressures. If I look at the total debt pie of the company, the majority exposure of the company is towards the deferred payment liabilities which are for the spectrum payments in the forthcoming years. For this debt, if I look at the cost of borrowing, in the Indian market, the interest rates have fallen by a little from 10% to around 9.4%. However, in the US market, the cost has risen tremendously from around 1% to 3.9%. Therefore, the company has smartly reduced its US debt liabilities and is moving towards the INR debt. Moving forward, if I look at the debt serviceability, the debt service coverage ratio of the company has been going down and the net debt upon EBITDA has been increasing over the years because of two reasons. First, the company's exposure to a leveraged balance sheet and the dwindling EBITDA ratios. The exposure is majorly due to the capital expansion that the company is undertaking. Now let me take you through the financial performance of the company, where we can see that the company had a very healthy growth from financial year 16 to financial year 17 in terms of revenue and EBITDA. However, in year 2018, the company had a substantial fall in revenue and EBITDA margins. If I compute a compounded annual growth rate for these three years, the revenue, EBITDA and EBITDA margin all are negative. We have taken the span of 3 years because of the disruption caused by the new entrant in the market. Moving forward, the same financial performance is reflected even on a quarter-to-quarter basis, wherein the EBITDA, interest coverage ratio and EBITDA margin all are falling. If I look at the financial performance of the company, it is not so good. However, after benchmarking it against its peer competitor, we came to an understanding that this is not a company-specific phenomena, it is an industry-wide phenomena. We have taken its peer competitor as Vodafone Idea Limited because of the availability of the data in the public domain. We can clearly see that the revenue from operations, EBITDA and EBITDA margin of Vodafone Idea Limited have fallen very steeply as compared to Bharti Airtel Limited. The same is also being reflected in the percentage change in revenue on a year-on-year basis. Moving ahead, the same trend is reflected also in the return on capital employed and return on net worth, wherein Vodafone Idea Limited's ratios have fallen very steeply, indicating that Bharti Airtel has made efficient use of its capital. This is a very positive point as far as the credit rating is concerned. Moving ahead, from the operational front, Bharti Airtel has a massive holding over spectrums across all bands. In the share of liberalized spectrum, Bharti Airtel owns more than 28%. Coming to the liquidity analysis, because of the competitive pricing pressures that have been faced in the industry, the profits are dwindling and the same impact can be seen in all the cash flow ratios. Comparing it with its peer competitor, the ratios for Bharti Airtel have very much stable as compared to Vodafone Idea Limited. This brings again a positive credit rating aspect for the company. In the next slide, we can see that the current ratio and the cash profit margin of the company are relatively stable. However, the data velocity has been increasing over a period of time. This reflects that the company has very well managed to establish longer credit periods with its suppliers. This also reflects a good credit point for the company. Now I would like to call Tanvi to conclude this presentation.
Thank you, Rishabh. In the last slides, we will go through the investment summary and recommendation. First, let's look at the credit rating history of the company. Both ICRA and CRISIL have given it a AA stable rating in December 2018 with both positive and negative comments. The company is taking steps to deleverage, which would help improve its credit metrics. There are pressures on margins. It has a robust portfolio segment and diversified portfolio business. We have identified 9 key rating drivers, out of which 6 are positive and 3 are negative. The rating drivers have been classified on an impact assessment scale of low, medium and high. Let's look at them one by one. In case of the product portfolio, we see that Bharti Airtel has a very diversified product portfolio which will help mitigate its operational risks. In terms of African operations, the African operations have improved in the recent quarters, which is good for the company. The company also plans to deleverage through its proposed stake sale in Bharti Infratel after the proposed reverse merger with Indus Towers, which has enabled it to raise 37,000 crores. It has also raised $1.5 billion through its pre-sale IPO from 6 major investors. It plans to raise a similar sum of money through its IPO in African operations. The acquisition of Telenor and TTSL has enabled Bharti Airtel to increase its customer base and increase its spectrum holdings. On an overall basis, it enjoys a strong market leadership position in spite of the disruptive nature of the industry that is currently there. In terms of the negative ratings, moderate debt coverage is one negative credit aspect which is concerning. In the situation of the industry, it is highly competitive and there are continuous pressures on margins, but in our opinion, The industry looks promising considering that the pie will now be split into 4 people and there is a possibility of internet penetration doubling by 2020. On an overall basis, our recommendation based on our analysis presented in the above slides, we expect the company to sustain the fierce competitive environment in the Indian industry, perform better than its competitors on account of its successful operations in Africa, and survive in the telecom industry for a longer duration due to its highly diversified portfolio of services in comparison to its competitors. We therefore recommend an overweight of the stock. Thank you.